how can I do the settings for Fibonacci? Let's say I will start from scratch adding the Fibonacci speed resistance arc. So I will have the default values. Now I will hide everything just to explain and give you the levels to comply with this kind of measurements. I will hide everything that we will not need for that, just leaving the real Fibonacci. You will see now that also the real Fibonacci defaults are something that makes sense for price action and levels. Let's remove this downtrend Fib Fibonacci and just stay with one. So now we just have one friend here. These friends, when you add it from this menu, the second one, Fib Speed Resistance Arcs, you will have various settings, but in the style you will have all the Fibonacci levels that are by default inserted by TradingView. So now we can change them. Let's take a peek or remember how to do that. If I want to obtain the incremental series that is just a 0.11, 222, 333, 444, I just have to change my default one by one, of course. It's not something that you can do other way, but this way, 0.333, 0.444, 555. If you don't remember, I will also show every level for some seconds in order that you can copy your idea and levels for your settings. But let's say that we are here. So we set practically the homogeneous, I don't know, equidistant levels. So everything is multiple of 1, 1, 1, 2, 2, 2, 3, 3, 3, specular. Like a mirror, this is an optical formula to calculate the light refraction in the mirrors. This progression is regular, so I want to save it. I will call, in my case, I will call my experiment in order to delete it. As mint, no, because I don't have mints. My experiment. Now, my experiment is here without the E, and when I have to remove, I will remove, but let's go to default. This is default. My experiment is here, and I literally change it fast. It's not just related to levels, but also you can have no background, no levels, because you know where we are. You can have full circles if you want. You can use just one color. Not suggestible. Trend line is this one, the gray one, so it will give you the spot until the number 1 and the form of the trend line, of course. If you change some of them and you save, when you save again, you have to save on the same name. So again, my experiment. Again, you want to write? Yes, and so on. Now, my experiments. Let's delete my experiments and let's show you the defaults. First one. The defaults are this number. You can stop the video and take a screenshot, or I will do that for you and upload that in the Telegram main channel maybe, or technical analysis. This is the default as you have it from the TradingView toolset with defaults. So you can use the whole lines and so on. You can use the background or not, depending on how you want to be verbose in your charts and how you want to draw arts, you can have then the golden ratio. Golden ratio, as I said, is something very near to this number, 618, 681, 816, and so on, permutation of this number for 0 and 1 levels. Very important, because the golden ratio is where generally we have the maximum retracements, both up or down, and in big movements like the big trend, we went to 52 with the price here, 52.8, which is exactly the golden ratio of the whole retracement from this moment to this one here, the lowest part of the trend price action. So golden ratio resistance levels. After that, the incremental, we already tested these incremental levels. Same thing, before saving you can add these levels or not. I suggest you to leave them because it's important to have the context, but when you want to publish your chart effectively, you can remove them. Then we have the P Greek, so the number that is 3.14 multiples. These are the levels, you can copy and paste them. And finally, speed of light, 144. These are the levels. You can save them as a template to do arcs and similar things. And I think that with these points, we are completing the current view of the Fib Speed Resistance Arcs. Now let's go to the candle, because already closed, I saw it. Let's go to see how it closed, if up or down, and so now we are starting a new week. I want to see, to understand the action for next week, how we closed, how we opened, and many other things that we will see now briefly. Remember that we have a data on that resistance that we could go a little bit upper. I don't remember the level, but it's in the video, and maybe you brought it down. Maybe here at 47,000, I'm not sure. Anyway, this was the previous week candle and closed to 46,04030, which is practically this number that will appear here. Why it is important? As you can see, it closed over 46 just for $40. The levels that generally are related with closing the weekly candle, I already underlined in a previous, a couple of times that we talked about this in videos too, is really near to round numbers, not round numbers on 1,000 digits, but round numbers for everything. So in this case, 040 is a little bit more than 46,000. In this case, 791 is a little bit less than 51,800, and so on. If you check, this is just 7 cents closing over the 48,800. This is very important because generally all this price action is generated on time frames by algorithmic trading of bots that are doing market making. So they buy and sell following a specific logic of, let's say the programmers are following strict rules dictated by the market gaps that are left from market making to go back or up for the price action independently of on what people are doing. Using all the tools like the Fibonacci resistance, the Gann square and everything, we have just a replication of this function, because this is a function effectively. If you change the view to line and you start study this function on a geometrical point of view, you will find that each time that we change direction, we can spot derivatives and calculate also integrals for the area that is in these time boxes, and it will comply geometry. So it's not just price action, market, it's mathematics. And it's very important to consider that algorithmic trading is following these mathematics. So if I have something that is similar, like this price action of the 2020, you would see that you would spot something very similar to where we are now. The rise up, the peaks, the first down. This is not where we are, but it's like this kind of trap that we had here, but in a smallest box. And all of this is the move before the uptrend, and we are more or less here. So we are going to follow probably this pattern and going down of about, let's measure, because the main point is that we can measure how much was the change here, 63.42%. So what would happen if I lose the price for 63%? When they say, no, it is impossible that we go to 17,000. It is not impossible. It already happens, and it's something that you have to consider. It is also possible, why not, that we go to a fantastic number, 522% in a time that is just 1 year, to be honest, and that operation will drive my price in a fantastic world, because it will be very, very incredibly high for the current point. We will go to 100,000. I'm not using the logarithmic scale. If you want to do forecasting and you use the logarithmic scale, you will have bad results. As you can see on logarithmic, this is just 116%. I will have a different way of seeing the price action, because it's in linear ratio with every kind of activity, but it's not really real. So if I move this, an example here, you can see that from this point, it's not 116%, but it's 100,000 18% to the high, and it's not correct. We have to remove the logarithmic if you are doing this kind of forecasting, because otherwise it will not be 500 like earlier, but much more. Okay, so it is possible that we have a retrace down until this level. We have to consider that in our case now we have many resistances that were not on this time box, like we had here just this resistance that was broken, and here the support was very low, while the situation currently we have effectively this kind of lines here at 28, a strong resistance or support in this case. Another support here is 19. So I would move this kind of activity for the price at a limit of 56%. Now, back to the closing weekly candle. Generally, you will see that when a candle starts green, it's a trick. We spotted earlier that we have a resistance here. To be precise, I don't remember where it was, but I have the levels here. One of these is the current optional level for that rejection. These are the three that are in the circle. So 47, it's way up this resistance line that was drawn earlier, considering probably some kind of trend. I don't remember what it is. This was the center line of this trend that we drew earlier, so it's not a real resistance. We can remove it and trust our Fibonacci speed arc retracement. So let's say that we have a limit here. We could go at this point in the current price action, or let's do a path up to here. It will be on 15th of September, so in 2 days. Casually on Tuesday, which is the turnaround for Bitcoin during the week. Everything matches. Here being rejected, it was an important rejection point, and it had this kind of action. So effectively, I'm quite sure that it should go this way. Not 100%, but this was what the resistance arcs were telling us. No, these are the little one. It should be in this folder, yes. Okay, so I have to lock the price. As you can see, it's very boring sometimes to work with these tools if you have to lock, unlock, and so on, but let's do that because we are patient. So we had this trend line that should match these boxes. It is here. I'm not sure about, that is the other one. I should undo everything to spot the correct one, which was one of these, of course. So it was speed of light, yes. Okay, yeah. Number one. More or less it is here, yes. That should be one, so, okay. This is the lock that we have to do. I was too much pessimistic, but this should be the price action for the next week, possibly here rebounding or following. Remember that I said that on outer circles it's possibly something that we can follow, let's say, with more strength. So, okay. Drawing the next price action, we should have levels for the week until 18th of September, in example, that give me an interval of price from 47, we are not there yet, but we should reach that point, down to 40. We can also follow other strategies. In example, now we have all of these levels that are from these arcs. So our idea for today was to use the arcs and have levels, but we can use other tools now, other indicators to check. In example, easy task. Ichimoku. Let's go Ichimoku daily to see what would say Ichimoku to us. If you don't know Ichimoku, it's not a problem. I just would use it to to spot some important points. The lagging span, which is this, let's say it's a line corresponding to the price, but thrown back 21 period. So when this line enters again the price and crosses down the price below here, it is a sign that we have a possible downtrend entering in play during the game. The uptrend is here. As you can see, the lagging span is completely out of the price line, crossing over, but here it's crossing the price. So this is an important point to consider, because we could have something that, if you are trading live this kind of indicator, it would be a sign to exit on minor profit or minor loss, but not keep staying in the trade, because it's almost sure that this line will follow down. Then we have these two lines that are like the moving averages. When we cross the blue line, you can see that it is the baseline with the conversion line. Baseline is red in my case. When we have the blue line crossing over the baseline, we have a long position. When this reverts, we have a short position. So we have a sign here that something is changing consistently. The blue line is effectively crashing down, while the red one is staying in a straight line. So here it's warning sign number 2. Number 1, number 2. Third warning sign. The price is following this line on the clouds, but it's on the first rebound and didn't touch the cloud. So we never entered this zone, like, I don't know, an example, in all cases are on reverse, entering here the cloud and going up and retesting outside. We tested earlier, so we have been rejected practically. We will have to find a resistance point here with the arcs. We found it, and we will be entering this way, boom, in a couple of days, passing the cloud. You can see also that this upper line of the cloud is starting the convergence with the other lower line, so the cloud is reducing. Third very important sign. So on Ichimoku we have a warning. We are approaching a possible confirmation of this move. Let's remove Ichimoku and go for exponential and moving averages to understand where we are. This indicator is really easy. We have two moving averages, 100 and 200 here, forming a very consistent trend identification. This is the old death cross that we had on July. From that death cross, the trend is downtrend. This red line is identifying effectively the price action as a lagging price going down. We are entering again the let's say cloud, but it's not the cloud. The area, the fill up area on red. So we are crossing down our friend, the 200 moving average. And you remember that when we crossed over this line, all the people were singing happily because they said, we are recovering the market structure, we are going over the 200 daily moving average. Well, now we are going under and probably being rejected here. We are going up, but we will go down and probably enter. It's a option that we will go up to this level. Why not? But considering Ichimoku, these lines, now let's look at the fast moving averages. This is the current area with the 100 and 200. The exponential moving averages that I have here, it's something that you can spot by eye. When it's a long position, so starting from here, this cross of the slow one, the 21, the 21 with the 9, number 21 with number 9, the 21 will go down and the 9 will go faster up. So with this price action, I'm always diverging these two lines. But look here, not here on the red big candle, but after that. What happens is the reversion of that cross. So now the slow moving exponential moving average is crossing again over the fast one. What happened in the past when we had that? Look here, no cross but a down. Let's go here. Look what happened when we crossed down that way. Here or here. More similar to our situation right now, because it's a long position here, converging but never touching or crossing, so I maintain my long position. But here I have the cross. What happened now? I have that cross. It's not science when you have these kind of crosses, but you can do your math and start thinking that we are on a daily time frame, so not 1 hour or 4 hours or 12 hours. It's an important time frame. It's something that is marking the difference. And here we have a cross. And if we have a cross, something will happen. When we don't have a cross, something happened the same, because look at here. We didn't have that cross here, but the price went down. Could be sad, unsaid, could be tragical, but when this green candle will meet this hidden resistance, which is the fast moving exponential moving average 9, we will have rejection. So it's probably something that we could move here and not here up, like the Fib Resistance Arcs suggested. I took the inner central, but probably this level is already on the Fibonacci resistance, and you can do it for exercise. To add this moving average, I will share this indicator, is mine, but when I have to share it, I can do two ways. You can add it as a source code, copying and paste, and I could pass the code in our Telegram, or I should publish this script in my account, but you should ask me for the invitation and so on. So I think that a fast way is to add an indicator directly. But let's see if I can publish this script. I have to write many things because otherwise it will not permit. Let's do in another way. I will give you then the option to add this script. When I share publicly something like this one, which was publicly shared with a bundle of moving averages, it turns red because they don't like the fact that I don't add very long descriptions, and they block my content. So for that reason, I will just add a long description, and then I will give you the invitation link to get the script that we are using here. Yes. I will publish this one. Okay. Scalping, why not? It's something that we can publish this way. Invite only, because otherwise, no. Open, private. Yes. category, moving average, tags, no tags. Let's see if I am lucky or not. Title too long. Okay, no problem. Let's reduce the title. Ma 100, 200, my 21 scalp. Let's see. Okay. I will explain how to use it because it also have things like this arrows. These arrows are very interesting if you are trading with this script. It's like a strategy. You can look at the code and do the same. Here in example, when you have a real interesting position, you will have the long. This long is based with no secrets on this cross. Now, what I see is that we still have no red arrow here. So generally when the script identify the indicator identify a short position, it should give you a red arrow, but maybe it's the version that I didn't finish, so it doesn't have that one. I will update the script soon and earlier, but generally you can use this. This will be something that will give you the same ideas for having the downtrend, the change of trend, the fact that we are going down, and there are many other things that you can consider, like the RSI. In example, we could add an RSI to see how it is performing, just a relative strength index without going deeper. Effectively, this is not going up because generally RSI started to fall from the overbought zone, which is over this dotted line or dashed line, down to this one. The Bollinger Bands that are also indicators for understanding if we have overbought or oversold price. I have to remove something. Let's remove Ichimoku and the script that I shared. Bollinger Bands. So Bollinger Bands are telling me that we are rebounding from the lower part, but we are expanding the Bollinger Bands, so it is possibly some action that will perform this way. So from the lower bands up to the middle band and down. I don't have to fall in the trap here, but as you can see, this level that we had here is very important because it's also the mid of the Bollinger Bands. When you have so many coincidences that are related to the levels that are here for rebounds, I would suggest to write down a note or do something like this, write down the price levels, because something that's going to happen here, we are sure about that. And well, why not saying that could be an upwards move? Of course it could, but we have many coincidences and bear sign that are spotting crosses, setting evidence on the rejection on the arc resistance lines, and so on. So I would not play the game of saying we are going possibly up because I want to be bullish. We are experiencing too much bearish signs, so I don't think it's a bullish time to spot the trend. Let's go for the other indicator, that is the Keltner Channels. This is something that I love because it's my only way to trade yearly. Yearly because I generally use it to enter a very important starting of the market, like the bull one, to exit on profit here, where when the price is way over the upper channel and to enter again on the lower channel. Let's go here to see. We are arising from the lower channel, but in the last session that we had with Hafsa, I said her, this move is valid in my strategy when I have a body of the candle out and lower of the band. So let's go to see what it means. It means that I would enter a bull market, not in this case, but in this case I will have a real strong out of the price from that band. So I would enter again to play until the resistance points. But then, as you can see, when I have action like this or like this, it's just re-entering to a level that will not make me reach on a trade, because it's just an indication of re-enter and a confirmation of a little move, but not of a bigger move like it could be this one. Let's go to check the most important move. Look, this is an entry point, completely out from the lower bands here with the price. So it means enter immediately, because it will be a big run to the up and so on. You could exit here and get back again here, but it's just a minor move. If you enter here, stay there, because until you see a real action like, why not this one? How would I have been earning swing trading this swing from high to low? Just not exiting, but let's say entering here, because I had the confirmation that I am really below the Keltner channel. So I enter here, or when the red candle closes, I enter on the green one. And I decide to exit on this point. The candle completely green, and or let's say honestly, this one. Completely green candle with body over the band. I earned 134% of my trade. In how much time? 3 months. Not bad. Now I enter again the trade. When? Here. So I enter here and I go out more or less here, because it's the candle. When I go out, I can stay out. Why not? I can enter here on the first red. The difference is really marginal, because you can see that here I decided to exit on the first big candle completely out of the bound. If I do that entering the red one, maybe I will earn 10% more, but it will not be a big deal. Now I will have to decide, because this is already the second trade in this sector of the price action. I didn't enter a trade. I would decide here what I should do, because effectively here I don't have the candle out. But how could I integrate my strategy with a regression trend? If I am on a bull trend like this one, which is ascending trend, I will enter just under the center line. So under the center line of the retracement inside the Keltner channels. So in this case, I will consider that after exiting here, I could enter here, or late here, but under the down. My confirmation is the trend. If I have the trend going up, I will do this, and I will stay honestly here, but the trend is not changing. So let's stay until the trend give me signs of change. Up, up. When we touch again the upper, re-entering, I will exit here. And I will consider the trend again, entering here, in example, around here. Let's see, be honest here. And exiting here when the red entering the upper band again. And again, now we will count the money. Here and here. Here and here. And stop, because now here we have the first interesting point, which is the bodies of the candles are under the band, never touching the band but under the band. So this means that it's a powerful move. At this point we have an out with a re-enter here. I mean, this following the strategy, the current strategy would be from here, the red one, which is out, up to here, and the other one would be uptrend, so center line from here to here, maybe, yeah, and maybe quite stop, because this is really a peak, so I would not choose that. I would stop. I would not be trading now. I would be waiting for this, but since now it's starting downtrend, I don't have the outside of the candle, so at this point I am no trading action. The no trading action is I traced a rectangle some time ago. I don't remember where it is. It should be in another chart like this one. Let's see if I'm lucky. No, not so lucky, but it should be here. This is another Bitcoin chart. The rectangle was basically from 43 to 55. So let's go back here and let's trace the 43 to 43 to 55. This is a no action. Sincerely, I was not considering it using the Keltner channels, but it makes sense. Makes sense because in this area I don't want to risk. I could enter a short here, but I don't play futures, and I don't like shorts, sincerely. As you can see here, all my trades were longs. Sleeping happily, don't having shorts, but just longs, following a uptrend. I'm quite sure that a reversal will imply something. Look at this reversal. We started the reversal here on this candle, so reverting the downtrend to a local uptrend, and after 1 month, 45 days, we are still going up comparing to this entry point. So I prefer to sleep happily, and if we count here 8, we have about 100, 200, 350. In 1 year or 15 months, we have 200% and more, 350% of earnings with no stress. What would happen if I don't care about all the this is named compounding. I mean, entering here with the profit took at this point. What would happen if I don't do that, but I just do this? I will earn a difference of 1,321% in 1 year. Of course, this will be an optimization of that earning, because I should also short. But since I don't short in this line, doing this optimization of compounding It's just useful if I want to differentiate the investment. But if I leave that there, I earn the more. So 1,340%. It's way better than getting crazy with entries and exits, because I don't have to bother about that. I leave my money. Of course, I need more capital, because if I have $100,000 here, I have 1 million more, 1.5 million in one year. But if I have $100, maybe I should optimize my trades this way to differentiate and be sure about more profits. I don't trade futures because I don't like to be with alarms set. In this case, imagine that you started the trade on 13 March of 2020 because of the strategy of the Keltner Channel band really confirming this is a very big incoming move. You spotted the uptrend, confirming every time the uptrend, and you left that until here. And if you are late, let's say you are late because you say, I know, I want to stay in the trade for more time, and you exit here late, you are still earning 865%. Of course, it's everything lost here, but it's 865% in one trade. Not leveraged, no risk, big amount of capital with no margin required. So a way of trading that I personally prefer to small day trade, which is quite addictive, and it's risky. You can earn the more. Of course, if you do leveraged trading here, you will earn much more. But I'm too old for that. I prefer to sleep happily and leave the money there earning for me. So what about this point? We learned that for the Keltner channel, the maximum point probably will be the half of the band. For Bollinger Bands 2, for the resistance 2, the RSI is pointing down. We could add more indicators on the RSI, like the stochastic RSI, to see if the impulse is... I would add the ROC, rate of change, which is something that's better. The rate of change is telling me that since this point, 19th of August, this candle, the price change is starting to decline. So what we could expect, this is a complex indicator based on many moving averages and the rate of change of the price. So what we would expect at this point if we follow the historical moving averages action. We would expect an increase, but we had a decrease. And this decrease is constantly diverging. So this action is not something that we could expect as a real reversal. It's a really weak candle. We are on daily. If we go to the weekly again, we have something that is starting green, but sincerely, it could close green here. But we said Tuesday on the Fib Resistance Arcs. And the rate of change weekly could give me something that is changing, but I should change the values because weekly I should reduce many points. So this is set for daily. Daily, not 3 days. The importance of the settings in indicators. If you don't have the correct numbers here and you go for example, I saw a MACD monthly, which is completely bad because on the monthly MACD, you will have an increase. So we are going up for the monthly MACD. But it's bad, it's not correct, because here the histogram should be red or decreasing, and it's not, due to these values that are practically 1 day for the monthly time frame. while in the weekly case it's also failing because it's not in line with this kind of action. On the daily probably it's good. Yeah, on the daily it's consistent because it's slightly recovering as it is, and the price is going down compared to this level. So this one, this is effectively consistent. So these settings for daily are good. I have a map of all the settings, but I could say that on monthly, I think, or weekly, MACD, you should have number that you could imagine completely different. I think for 54, 48, 24, if I don't remember bad. But look at how it changed. Now it's similar to what is happening. So this is a slight price action to the upside. I am still a little bit unaligned because I have a decrease here, but probably quite good. And as you can see, this action is excitating on the monthly, but it's effectively showing a possible down of the price during the month. So probably I will have to change this to 57. Experience will give you this kind of, and 28 here, this kind of tuning. But when you have doubts, just consider that if an indicator is showing you something not in line across various time frames, the settings are not correct. You can research the internet or experience how the, in example, look, this is correct but inverted. So I have to change this to 28 and this to 27, 57 probably. Just little strategies and tricks to find why we have inconsistencies. Okay, this is green until up, yes. Now it's up where it has to be. It's the price action, as you can see. But look at this number, 28, 48, 5, and here I could use the 9, why not? Should be good. Yes, here it's done, okay. The histogram, here it's going up like here, this, and from the up 2 candles down. So I can have the right results here, quite crossing. These two lines are coming to a cross, and I have the down move of the price. So when you have these inconsistencies, you don't have to trust the indicator and think that something is really changed, but you have to consider that these inconsistencies are more related to practically the bad settings of the indicator. Never trust an indicator with default settings if everything is calling on a bull move or a bear move. Try to investigate why and switch across different time frames.